we think the safer end, the triple B, double B, is where the carry is important, and we think that's got to be forming the bulk of the portfolio. But there are specific names, specific areas that may offer additional yield, additional opportunities, and that's why we think investors should focus on some of those situations, because in order to generate slightly higher returns, those could be areas that one look at. And obviously you mentioned Pakistan, and that's really coming from some of the macro research coming out from our economics team. So a couple of reasons support why Pakistan is on one of the areas that we think investors should look at. I think one point is that in terms of the current account, we do think that they are in an improved position. The second point is with regards to the pattern, the amount of debt that they have and who owns them. A large amount of Pakistan debt are owned by multilateral and bilateral lenders. And so we think that means the amount of dollar bonds refinancing is actually not that high. And so the chance of them refinancing and rolling over a lot of the debts are actually pretty good. So because of that, we think Pakistan is still one of the areas that are worth looking into.
Ken, I got to ask you, this is a broad question about vol. Whether you look at equities or currencies or even bonds, vol right now, volatility, is unusually low, given what's happening geopolitically, given we're counting down to the U.S. Elections as well, and given, of course, for markets, uncertainty about just how aggressive the Fed is going to be. Does that concern you, or does that actually spell opportunity?
Well, our view, if you look at what our global markets team have been saying, is that we think the market volatility, certainly the macro volatility, should be coming down. And I think one important point our U.S. economists have made earlier this week is that they've actually lowered their subjective probability of a U.S. recession in the next 12 months to 15% from 20 earlier. So 15%, you look at it, is a 1 in 7 type chance. So that, we think, is one of the key reasons why you see the macro volatility is actually lower.
Okay, I hear you. Ken, got to go. Great to talk to you. Appreciate the time. Keep safe. Do it again very soon. Ken Ho, Goldman Sachs, joining us live.